Welcome. This is Annuity News Now. Despite a difficult interest rate environment and lower than normal yield, income annuity sales grew almost 18% in the fourth quarter and nearly 7% in 2011. This is according to estimates from the Beacon Research Fixed Annuity Premium Study just out. My guest is the President and CEO of Beacon Research, Jeremy Alexander. Jeremy, always a pleasure. Welcome back.
Thank you, Scott.
These kind of numbers probably not a big surprise, but explain, again, they're surprising in one sense, why they're doing so well in this low interest rate environment.
Sure. The income annuity sector has continually done well over time, even with rates being very low. And the reason is it's pretty much a needs-based sale. Therefore, people who need income are going to look to these vehicles as being the most efficient way to receive that income. And even with low rates, the actual dollar amount of the check is significantly higher than pulling interest out of any other type of interest-bearing account, simply because you're receiving a return of your own money plus interest. So in effect, you're getting what we call mortality credits up and above the interest rate being paid.
And then talk about indexed products, because they also did very well, and how this relates to the current equity market environment.
Yes, indexed products did very well, and they were primarily driven in a couple ways. One, based on the sale of income riders that are very often placed within these products that provide income for life, another similar theme that we're hearing from the income side, as well as cap rates, at least for a good portion of 2011, were higher than fixed-rate annuities of similar types. Therefore, they were being sold very often on the cap rates. Now, that has dampened in the last quarter of 2011 a bit. Cap rates have fallen, and with the rising S&P 500 putting out some pretty big numbers, that actually has hurt sales a little bit in fourth quarter. But GLWBs, as well as some pretty aggressive premium bonuses, have helped keep the indexed market moving.
So then let's look at the rest of 2012 and how you think this study would show any kind of trend here.
It is very possible, although we need to obviously wait and see. The word we're hearing from our clients in the market right now is that 2011 Q4 may very well be somewhat of a bottom for the fixed annuity market. We expect to see continued strong sales slowly inching up throughout 2012. And obviously a lot will have to do with what happens with the interest rate environment as well as the equity markets.
Were there any other things that were notable in this study that you saw?
We saw, again, sort of back to the income side of things, New York Life seemed to really get continued traction in the income market, and that has really helped the overall market, is their traction in the income side of things.
Well, it's always a pleasure. My guest, once again, Jeremy Alexander. He is President and CEO of Beacon Research. Jeremy, a pleasure. Thanks for your time.
Thank you, Scott.
I'm Scott Drake. You're watching Annuity News Now.